Matt, give us the 30,000 foot view of what Solid Wealth Advisors brings to the table for the people of Northern Colorado.
Well, from a 30,000 foot view, the value that we bring to the people in Northern Colorado is that we're an independent, locally owned retirement planning specialty firm. And we recognize that the needs of pre-retirees and retirees are completely different than those that are younger investors. So we specialize in helping seasoned investors manage their assets, build income streams that they can outlive in their retirement, pass their assets as tax efficiently as they can to their heirs, and protect the retirement against the high costs of long-term care. And the secret sauce in what we do is really our independence, because it allows us to research the market to be able to provide the most advanced and powerful planning tools for the people in Northern Colorado.
You've helped me understand how the advice that a pre-retiree or retiree may receive could be heavily influenced by how the person given the advice is licensed and contracted. Can you elaborate more on that?
Yeah, one of the most important things that I can help people in Northern Colorado understand is that the type of advice that they're getting is largely dependent upon how the person that they're talking to is licensed and contracted. And here's what I mean. If somebody in Northern Colorado goes to a stockbroker's office and asks them for advice about their retirement, well, the solutions that they're going to be given are based upon securities. And they'll never be told the virtues of the positive things that the insurance industry has to offer. On the other side of the coin, if somebody goes to an insurance agent's office and asks for advice on retirement, the insurance agent's going to tell them all the virtues about what the insurance industry has to offer and can't legally tell them about any securities products because they're not licensed. So what we've done to solve that problem is we hold a securities license and we also hold an insurance license, so we can take the best of the securities world, the best of the insurance world, put them together in a plan for the benefit of people in Northern Colorado, so there's no bias and conflict of interest. It really helps you create a plan for retirement that adds strength and synergy to itself, and to me that just makes total sense.
So why don't other people do that? It seems like you found something that really makes sense.
It takes a lot to be able to be duly licensed. It takes a lot of discipline to get the education. It takes a lot of discipline to go out there and research the tools on a continual basis, and a deep understanding of how they actually work together to complement each other. What I try to do from the time that we first met is create trust with transparency, so people feel comfortable rather than, take my word for it, I'm giving you the best thing. No, we're going to show you, right? And we're going to prove it, and then we're going to give you, fully transparent information. And to me, that's what really creates trust. And so I think that's really what people in Northern Colorado want, is they want to know that they're working with a trustworthy person, and that the advice that they're getting is not biased.
Well, does the perception of mistrust come from the fact that oftentimes people are selling one thing or the other, not both, so they have sort of an end goal in mind before they even meet their client?
Well, there's a couple reasons why there's a lot of mistrust in our industry. The events like, the tech bubble crash, of 2000, the real estate crash of 2007, the equities market correction in 2008.
Where people lost a lot.
They lost a ton of money. And instead of getting good communication from their advisors, a lot of them were hiding underneath the table hoping their clients wouldn't call. What we've done is really try to create, trust through transparency by providing really good reporting and tools where people can be plugged in 100%. And so, from our standpoint, it's important for people to really be plugged in into their retirement, because people would rather know when things aren't so well as opposed to not know. So in our firm, what we do is on a daily basis, if people's accounts reach a new high, we're going to send them an alert via text message to their smartphone, or we're going to send them an alert to their email, so they know, hey man, I've got a new all-time high with my account. And we're also going to show them, if things aren't so well, this is the point that we're going to get you out. So we have a predetermined loss level. If we hit that, we're moving people out of harm's way. So we do that almost on a daily basis. On a weekly basis, we send our clients every Sunday a report that tells them how their accounts did that week. So it shows them in green what the actual number would be every Sunday. And we even have the courage and integrity to show people, hey, if the market wasn't doing so well last week, this is exactly how much you lost. And from my experience, people would rather know than not know. We go one step further than that, and every single month we send them a detailed one-page report of how their account did that particular month. So they don't have to wait 3 months or every quarter and get a 15-page statement that they can't read. That's frustrating for people. So We keep them plugged in by reporting to them daily, weekly, and monthly. We keep it down to a single page, okay? And then the other area that creates mistrust in our industry is fees. People don't understand, what they're paying in fees and how it really erodes their retirement savings. And so every single month we send them a one-page billing report on what they might be charged. And it's really simple for us because as non-commissioned retirement planners, we can't charge commissions for any of the investments that we're recommending. So that creates a really good air of trust because people don't have this connotation that we're recommending a product or an investment because it makes us a lot of money. So I think that's really what separates us from everybody else that's out there.
You've talked a lot about the common mistakes people make when buying mutual funds and how those mistakes are costing good people a lot of money in their retirement portfolios. So why is it so important to avoid losses in an investment account?
The number one rule of investing is don't take losses. And so for every dollar that people take in losses in the stock market, it usually takes two to get back to even. There's some common mistakes that people make when buying mutual funds, and they're really simple to correct. And there's two adages or two philosophies when buying mutual funds, and that is buy a good mutual fund and hold it. And the problem with that is research has shown that when you buy a mutual fund, even if it's in the top 100, the very next year, it typically doesn't even break the top 10. And research also shows that 5 years later, those funds that were typically in the top 10 5 years earlier don't even break the bottom 1%. And so if you're buying a mutual fund and holding it, it's not good because the performance really lags as time goes on. The other problem is if people are buying mutual funds and trading them out every single year and they're buying class A, B, or C mutual funds, the sales charges inside of those are pretty high. And one of the ways that you can really erode the performance of your retirement account is paying a lot in fees.
So it's like you have to turn them over more often, but there's problems with turning them over, so it gets pretty complicated.
Yeah, it's complicated and costly. How do you pick the right one?
Yeah.
Considering the very next year, they're very typically, research shows that they don't perform very well. So that's a big problem. And then you pay a lot in fees. There's a reason why a lot of stockbrokers don't want you to, know exactly what you're paying in fees. So they give you a big prospectus, and they don't have to tell you because they gave it to you in the prospectus, and it's buried, 30 pages in a 150-page prospectus.
Yeah. So how do you avoid the losses with mutual funds?
Well, we actually, if we do use a mutual fund, we use a no-load mutual fund. Okay. But more importantly, what we do is we use tactical asset allocation. And studies have shown since 1998, tactical asset allocation outperforms the traditional buy and hold a mutual fund type of philosophy by 300%.
You use Assetlock technology. How does that benefit your clients here in Northern Colorado?
It's a huge benefit for people in Fort Collins because it's kind of like a safety belt or a seat belt for investors. When you get in your car every day, what's the first thing that you do? You put on your seat belt. Why? It's not because you're a bad driver. It's not because you expect to get into an accident. It's because you're worried about the person who's text messaging and runs the red light, right? Or when you're driving in the mountains on your way to Steamboat to go skiing and you hit black ice and you go off the road. Well, Assetlock is the same type of device for people that are investing. Because what it does on a daily basis, it monitors their investments in case there's some type of catastrophic loss. So people can have a lot better comfort level knowing that if there is another stock market sell-off like we had in 07, 08, that they don't have to ride the ship all the way to the bottom of the ocean. So what Assetlock will do is it will get them out of harm's way at a predetermined level based upon what their risk tolerance is and how they want to be protected. More importantly, Assetlock is key because it communicates to our clients every single day when their account hits a new all-time high and what their new exit point would be based upon that new all-time high if things went completely south and there was another sell-off. It's completely invaluable. I'm Matt Jackson of Solid Wealth Advisors, and I'd really like the opportunity to show you the value that we can bring to you and your retirement.